let's get to Poilievre's announcement. With that context, is Poilievre announces the Canada First reinvestment tax cut. Okay. Today, Conservative leader Pierre Poilievre announced the Canada First reinvestment tax cut. Any person or business selling an asset will pay no capital gains tax when they reinvest the proceeds in Canada. Companies that reinvest in active Canadian businesses will also defer any capital gains tax. These gains will still be taxed later on when investors cash out or move money out of Canada. The break will be available on any reinvestments done until the end of 2026. Okay, so
that kind of sucks.
First of all, when they say it's 0% capital gains tax, it's not 0% capital gains tax. So let's break it down for the average person. It's like, where does the average person have most of their investments, if any? They're in their RRSP or TFSA.
That's right.
So is this change affect that at all? Zero. It has zero impact for anybody in their RRSP or TFSA. This is not going to make an ounce of difference because you could transition out of U.S. assets into Canadian assets anytime you want, and there's really not going to be any impact of that whatsoever. So that's not what it's for. It's for, like, primarily it's going to be for unregistered investments, and primarily, like, what do most Canadians have of unregistered investments, if they have any, is they probably have U.S. stocks. They probably have U.S. stocks. Maybe they have some foreign real estate. Maybe, right?
Maybe like S&P 500, blue chip stocks, that kind of stuff, right?
Small percentage of the population, right? And I can see, like, the temperature because, sometimes I posted it online before what the average holdings are in people's RRSP, TFSA, and unregistered. And people read what the average holding is in unregistered, and immediately they just say, this information is not correct. No one has that money in their unregistered. It's like, no, you don't have that. You and the people you hang out with don't have that in the unregistered. But what happens is there's, for every 100 people who has $0 in their unregistered account, there's another guy who's got 10 million. And that totally skews the averages of how this thing works. Because
do you think Mark Carney has an RSP saving up for his retirement tax deferred?
I guarantee you Mark Carney's got some unregistered investments. I guarantee you he's got unregistered investments, right? I'm sure they're in a blind trust, right? That's no, totally no.
I have no idea what's going on with that money.
Yeah, so, like, it's not going to affect anything in an RSP or TFSA, and people have to realize, like, that's only going to affect people who actually have unregistered investments, and it's not a 0% tax. So all it is like, it's not going to allow you to crystallize a 0% gain. It's just going to allow you to roll over the investment at the current cost base. So when you eventually sell that investment, if you bought something for $100,000 and went up to $200,000, and say your S&P 500 index fund is now at $200,000, and you cash out at $200,000 and you buy an index fund of Canadian stocks and that goes up to $300,000 someday, your cost base is still going to be the 100. So you're not avoiding the capital gains, you're just deferring it. You're just going to be able to roll it forward. That's the reasonable interpretation of what we're seeing there. And even when I say that, it's not super clear to me. Like, it says active businesses. So, I mean, when I read active businesses, I would assume that is, Canadian stocks, public Canadian companies. What I saw a whole bunch online was a bunch of realtors getting this and just saying, like, we're going to get 1031 exchanges in Canada. I was like,
no,
that's not what it said at all. Like, that wasn't even close to the announcement. No one's saying that we could roll over Canadian real estate into bigger and better rental properties. Like that there was nothing of that at all. It was, you could roll over foreign assets into Canadian assets. So I suppose if you had some foreign real estate, you could roll it into Canadian real estate. But that's, most people, like a very small percentage, have any unregistered foreign assets outside your TFSAs, and a very even smaller percentage of that, the most common foreign asset that people are going to have are U.S. stocks, not even foreign real estate. So, so people have to understand the context of that, and here's where the shift is necessary. Is most people think that the only way to manage your life tax efficiently is for RRSPs and TFSAs. And that's just simply not the case. Like your RRSP is, I always tell people it's a scam because it's sold as a fast way to grow your money. It's not, it's just a tax deferral tool. And for any sort of intergenerational wealth, it's useless. It's completely useless for any intergenerational transfer. So if your goal is intergenerational wealth and your vehicle is RRSP, it's like, having a Ford F-150 and trying to go to the moon. Like, it's just not going to work for that. For that, it's like you're taking half when the remaining spouse passes away, right? And people get into all the exclusions on like, oh, you can transfer to the kids, if you die before they're 18, and then the child has to bring it into income by their 18th birthday. So like, it's not an intergenerational transfer. Like, it's just not. Like, hopefully you outlive your kid's 18th birthday, number one. And,
repeat after me. RRSPs are a scam.
Yeah. So, okay. So, and there are ways that people can use unregistered accounts. And so I see this as like, there's your tax-free gain. It's like, I wasn't planning on paying any capital gains tax anyways. The goal was always 0% capital gains tax because I bought the right thing. Okay. I bought the right thing. And so, what do I have? Like, I don't own any foreign real estate. I don't own any foreign real estate because it's a bit of a hassle to manage. Like, it's a hassle to manage. It's hard to manage. Okay. I personally, I don't have any U.S. stocks. I haven't bought any U.S. stocks because they're not conducive to my tax, capital gains free tax lifestyle that I've already assembled for myself. Okay. Like, I didn't plan on paying any tax. Okay. On capital gains. So, there's a certain segment of the Canadian stock market that performs very, very well that we teach people in the boot camp, and the dividends that they pay are very, very efficient, but people, just group it in with the underperforming TSX versus the S&P. It's more nuanced than that, people. It's more nuanced. If you just look at the S&P versus the TSX, you're going to want to choose the S&P. But if you start looking at what I like to call the government protected monopolies that we have on the TSX, and you compare those to the S&P, you get a completely different answer. And then when you factor in the fact that if you organize it in the right way, you won't have to pay any tax, and you can leverage them really, really well to actually grow your money faster. So putting your money in an RSP is not a way you grow money faster. The way you grow your money faster is leverage. Leverage is how you grow your money faster. Okay. And your RSP is not an effective vehicle for that, right?
Right.
Like, that's just not the effective vehicle for that. And quite frankly, a lot of U.S. stocks aren't, because in order to write off interest, I need a reasonable expectation that the income, not the capital appreciation, that the income is going to exceed the interest. That's the test that CRA wants to see. So if I buy shares in Berkshire Hathaway that don't pay a dividend, I'm not going to be able to write off that interest. So I can still borrow to invest, but I can't make that interest deductible. And that's kind of a problem there, right? And so, what would in my life, it's like, what I consider is like, okay, what about my Bitcoin? What about my Bitcoin? Now, am I going to sell my Bitcoin to buy more Canadian stocks? I already have a good, healthy position at Canadian stocks. So I have this isn't going to be anything I'm going to use personally. Like, this is not going to be anything I'm going to use personally, because I'm not going to sell my Bitcoin just to defer tax to get into more Canadian stocks. Like, I'm just not going to do it, because the goal of the Bitcoin was to never sell the Bitcoin. Everyone's like, well, what's the exit strategy for Bitcoin? It's like, Bitcoin is the exit strategy. It's like, you're not trying to sell the Bitcoin to buy the Lambo. What you're trying to do, if you actually believe in Bitcoin, is you're buying the Bitcoin to borrow against the Bitcoin to buy boring Canadian dividend paying stocks that pay out tax efficiently. And then that dividend yield is going to make the payments on the Lambo. And then I can do that every 5 or 10 years. That's the infinite money glitch that, if you actually believe in Bitcoin, like, that's what you're trying to do, right? That is the end game. But you know what you have to have for that, Trevor?
What do you have to have, Josh?
Patience. You gotta have some patience. It's like those memes where you have those two monkeys sitting around. It's like, and he's like, when Lambo, right? And the other guy is like, hodl, like just like it's not gonna happen tomorrow. Like that's a 10-year, time horizon on that sort of outlook, right? Mm-hmm. So, but where this will be applicable is I have, a lot of people have, I think they have over allocated in the US. And you start looking at the US and you start looking at the price to earnings, and, you're paying, north of 30 times price to earnings for US shares. And I can show you a segment of the Canadian market that has outperformed the S&P 500 for not just a couple of years, but for decades, right? But they're locked into these positions, and it's hard, right? And so people with over allocations to the US, and sometimes I see it and it's like completely nonsensical. Like they have RRSPs and TFSAs and unregistered investments, and they have an equal allocation to all of them. They probably even have some fixed income products. And, in that sort of scenario, it's like you want to hold all of your Canadian stocks in the unregistered bucket, and you would want to hold your US stocks in the RRSP bucket, right? They just have it even misallocated, even if they don't want more or less Canadian stocks, even if like, I don't like that. I want to have some in these different markets. Like, okay, fine. But even if you do that, you should own the stocks in the right bucket that are the most tax efficient, right? And so this will be an opportunity for people who are in, too heavily allocated in U.S. stocks, either overall or just in their unregistered bucket, to rebalance in more tax-efficient Canadian stock strategies. Okay. Now, will they take positions in, Canadian real estate? I don't know if that's going to be applicable. I don't know when I read this, that you're going to be able to put that in real estate. It looks like it has to be an active business. So you'd have to put it in a home building company. Okay. Should some people do that? Maybe. Like, I do think there are people who, they got a net worth of, let's call it 2 million and up, and they don't really own anything other than their principal residence and an investment portfolio. It's like, that's actually kind of risky, they're because you don't have a stake in an active business. You don't have any gold. You don't have any Bitcoin. Mm-hmm. Like sometimes like that's a real risk diversification strategy. The banks will tell you buy our underperforming bonds. It's like, you just need me to buy those bonds so you guys aren't bankrupt on your reserve positions. But like, I don't want to, to reduce risk, I don't want to buy underperforming assets. I want to buy uncorrelated assets. Okay. Yeah. And that might help me, but it's a hard position. Like, it's a hard position because a lot of people who are looking for that, they need a partner. They don't have the expertise to do that. And so maybe that is something some people should consider. They have to have the risk tolerance and probably have to have the right partner lined up, because they probably shouldn't go from being a dentist one day to being a property developer the next. We've seen a lot of people try that, and that's
it usually ends in failure, abysmal failure, because they just don't have the skill set, the acumen, and really the financing for it, right? Financing is a big deal when you're getting into that type of a development or of that asset, right?
Yeah, it's harder than people think. It's not just money that can solve that. It's money and expertise and the team. I've literally worked with in the past. I worked with a lottery winner, and he tried to build too many houses all at once, and he had sufficient money, but it's like, I work with other builders building houses. It's like we've taken years, if not decades, to build the team, that can actually help us build those houses, right? And so you're just not going to have the infrastructure set up, even if you have the cash. It's a slow moving thing, but it's something people should consider. So that's going to be the real opportunity, is for people who have over allocated to the US, or they got some foreign real estate that's hard to manage, and maybe they can cash out of that and they can put it into either public Canadian companies or a private Canadian company. And even if they're just misallocated, whereas They're not over allocated to the U.S., but they have the wrong allocation in the wrong bucket. They're holding U.S. stocks and Canadian stocks in their RRSP and in their unregistered investments. It would make more sense to be heavily weighted in the Canadian stocks and the unregistered, more heavily weighted in the U.S. stocks and the RRSP. That's going to be an opportunity to rebalance. So that's what it is. It's not 0% tax, just like there was never a 66% capital gains rate, just like that was a 66% inclusion rate for anything over 250K. Right. This is not 0% capital gains tax.
No.
Okay. It's just a deferral for very certain, a very certain type of gain that you can defer if you buy a very certain type of asset. There's no 1031 exchanges. Please, realtors and real estate influencer on X, stop saying that it is. It's not. Okay.